Today is Thursday, October 22nd, 2009. This is Tim Knight, The Slope of Hope, and let's talk a bit about the market. First chart up I've got here is the VIX. This I've got going back for as much data as I've got. This goes back to 97. That horizontal line you see there is an interesting division. As you can see, throughout the 90s and up through early 2003, the VIX stayed between about 20 and 55 or so, in that range, depending on how dicey things got or how volatile or nervous people were about the market. And in 04, 05, 06, and into 07, we went into this incredibly complacent, very low volatility period, and we just actually got just beneath into the single digits very briefly there. And then, of course, we went from like 10 to 90 during the huge collapse of 07 and 08. And the reason I bring this up is we are back to the old low end of the old normal. Just about got back into the teens here. So from 90 to 20, it's been quite a ride. I'm actually have no options right now at all. I'm not even sure I'm going to be trading options again. But if I were an options buyer, there's certainly a lot worse times to be buying options because the premium is pretty reasonable. So I want to talk a bit about yesterday's drop and today's rise, and look at my beloved IWM here. This is the Russell 2000 ETF. As I mentioned yesterday, especially near the end, I had accumulated a lot of IWM on the short side, 16,000 shares, and I held on overnight. Why did I do that? The reason principally is because the entry point was real good, and you just never know if the day after an interesting day like yesterday is going to be more of the same. But it wasn't. And I want to make a distinction here, which is why I've called the subtitle of this post actually, I don't know what I'm going to call it yet. Basically, it's like a split portfolio. I'll come up with something clever about that. But what I mean by that is that I've got positions that I hold and are subject to stops, and then I've got more kind of day trade ad hoc positions, which tend to be ETFs, and they also tend to be much larger. And let me make a distinction between those two. So this, for example, is IWM. This is something I intend to trade a lot. And yesterday, and we're going to zoom here down to, say, a 10-day chart on a minute bar basis, I began shorting IWM in these levels. And as it continued to break, I added to the shorts. I don't remember exactly what my average price was. It was probably something around here, 61.5 or so. And then it fell and fell and fell. Now, being short so much of this is naturally a little unsettling to have that much on, not knowing what's going to happen next. But with an ETF and with something so liquid, and with such a large position, I do not let these kinds of positions, which tend to be numbering 2, 3, or 4 as opposed to 100, just fall where they may. This one, I allow myself to enter and exit. And in this case, and let's go down to like a 2-day here, the market opened and started heading down a little bit, and since we weren't heading down hard, of the 16,000, I immediately covered 8,000 here, and I set a stop. I'm going to zoom in on this part here. I set a stop just above this bar. In other words, 60.50. So here I got stopped out of the other 8,000. So my average cover price was around 60.30 or so. The profit was about $12,000 on this one. Now, good news and bad news. The bad news is that after I did get stopped out, it started to inch its way down, even below 60 here, and naturally that was a little bit disappointing. But to me, the risk of re-entering the short at a position like that really didn't justify the the potential profit because we'd come off this very sharply. So that's the bad news. The good news is, thank goodness I did cover that, because as we know, once it got this sort of shaken off, it moved up substantially. But here's the follow-up to that story. As we were rising, and remember at this point I had no position in the IWM, as we were rising, I was very intrigued by the fact that we were approaching an interesting little pattern here. Let me try to find my rectangle tool. And we can see here that this is what it fell away from yesterday. And as it reapproached here, as it got up to about 61.10, I began to re-enter my position. And it kept pushing higher. And so I shorted more and I shorted more. But as long as it was above, I was very comfortable shorting in all this cruft up here. I thought it was a safe place to short. Certainly much safer than shorting down here. So bottom line is, as I sit here on Thursday evening, I'm short 12,000 IWM with an average entry of, I think, 61.26, I believe. And I'll actually check that while I'm talking here so I can find out. So I'm 3/4 as short as I was last night, this particular position. But the important thing I'm pointing out here is that I took a profit in the morning and waited until later in the day for a better entry price. Yeah, I'm looking at my screen right now. So 61.27 is my position, short 12,000. So the distinction here is with things like SRS and SSG, both of which I also exited for much of the same reason earlier today. I allow myself to enter and exit these because they tend to be very large positions. The vast majority of other positions are simply there forever until they're stopped out. So today, when I entered the market, I think I was short something like 70 positions, and I got kicked out of about 10 of those. So I got kicked out of a number of them at a small loss, and definitely gave back on paper about 40% of the profits from yesterday because, we had a good strong day. But what's exciting for me is that the rise today was actually stronger than the drop yesterday, but I made more yesterday than I lost today. My belief is that the kinds of selections I've got in the portfolio will fall quickly, but will be resistant to being pushed as high in an up market. Now, tomorrow, of course, people will be able to reflect on Amazon's earnings, which are sensational. If we look at what Amazon's doing right now, it closed the day at 93.45, and as I look at my screen here, it's trading at 107. So this is a very, very, very big cap stock, and it's up 14.5%. I'm intrigued that the ES, as we sit here, is up, 1 point. That seems kind of a muted reaction. But I personally am glad to get these earnings out of the way because I'm not surprised that Q3 earnings are strong. This is all kind of an echo effect of of all that push that's been going on from the government to try to goose the economy. So I'm not surprised that this is strong, but we're going to get this out of the way. In any case, I'm feeling really good about the market. I'm feeling more at peace with the market than I have in a very long time. And even on a day like today, I'm able to trade much more fluidly than I have in the past, including a nice profit on SSO that I did earlier. So thanks to all my guest contributors. Wonderful reception from the slopers there. And look forward to wrapping up the week on Friday. Have a good night, everybody.